if you can look at sort of baskets of risk within the Asia bond market, what you'll find is there are a number that are very highly correlated to the US Treasury market, like Hong Kong, Singapore to an extent, where you've seen yields also rise very, very significantly. And we knew that was going to happen. These are markets where we've essentially had no exposure to their local bond markets, knowing that they would be very sensitive to those changes. So if you look at, a diversified basket of Asian bond risk, it's probably down around, 1.5 to 3%. But there's massive difference within that. If you were to look at the returns from the local currency Chinese bond market, where we have continued to see very strong flows, it's up about 2% this year. So that is a lot of outperformance versus, local currency EM, where you'd be down about 5%, or indeed global bonds, which are probably down about 4%. So very marked difference. I would say you've got a bit of an opportunity here because there's a few sort of headwinds. I know you've been discussing the COVID backdrop in your last discussion. COVID is presenting a little bit of a headwind to the recovery, and so you're seeing some consolidation in a number of bond markets. But for us, we would probably use that as an opportunity to shorten the duration of our portfolios and make them more resilient to what we still believe will be a medium to long-term rise in rates moving forward.
Right, but are you looking at buying into the hard currency emerging market bonds? Because I was reading a note put out by Reuters, I think this was last week, that highlighted how a lot of businesses out there are looking at refinancing ahead of the risk of inflation picking up, rates picking up. And so there could be a fair amount of inflow and activity within that space.
Yeah, the hard currency markets this year have actually been a better trade than the core local currency markets. Dollar-denominated Asian credits actually outperformed. So we have continued to see a number of opportunities. I'd say at the moment, the spread's a little bit on the tight side. So maybe have taken profit on some trades. Again, it tends to be very selective. So for example, given the very specific pressures that we've seen in Asia, in India, we saw dollar-denominated bonds in India underperforming a wide range of markets. And that was an interesting opportunity for us to add some risk. And I think we continue to see those types of opportunities turn up in certain markets. But, I think April was the first month that we maybe saw Asian credit starting to lag the local currency performance. So at the moment, again, looking across markets for some opportunities, really you have to look for the specifics of where you see volatility. So maybe for example, given the Huarong news, there's some volatility in Chinese property. You maybe find some opportunities there.